Welcome to episode 2 of our Fluid Talk series with Wentzel. In episode 1, we focused on how to think about CFCs, the judgment, the interpretation, and the areas where modern structures don't neatly align with older legislations. Today, we shift gears. We're moving from knowing how to think about CFCs to building a process that makes those positions provable, repeatable, and audit ready by design. When you deal with CFCs alone at scale, judgment alone isn't enough. You need a process that is not reconstructed under pressure, but built deliberately with evidence, documented reasoning, and consistency year after year. And that's exactly what we're unpacking today. To anchor today's discussion, let's briefly reflect on episode 1. We spent that session unpacking the types of judgments that tax teams must make under Section 9D, specifically around FBE, financial instruments income, and inter-CFC transactions. And we highlighted how difficult these judgments have become in a world where operations are decentralized and substance isn't tied to a single location. Cor, can you maybe walk us through those key judgments again and how modern structures complicate them?
Sure, because in the modern world, we sit with the challenge that we have to apply legislation that is very old and was written in a time when business was done very differently into or onto modern business practices and operating models. That heightens the judgmental component of the FBE definition, the interpretation of how you would be dealing with financial instruments, the complexity multiplier, dealing with inter-CFC exemptions, etc. So more and more, you'll find that your businesses, that a particular business, the rationale and the reasoning for claiming a particular exemption or taking a certain position differs from that of a different company or a different group. And that heightens the requirement to demonstrate on what data did you base your decision and what was your thought process? How did it go from data to ultimate implementation?
Thanks for that, Cor. So in episode 1, we clarified what judgments need to be made. Today, we focus on how you justify those judgments in a way that stands up to scrutiny. And that's where these 3 stages come in. They provide the structure for turning principle-based judgments into provable, traceable outcomes, linking evidence to reasoning and ensuring consistency from year to year. Devon, can you take us through these 3 stages and how they help tax teams build defensible advisor-ready positions?
Sure, Chris. When looking at these 3 stages, it's quite helpful because it structures the CFC process. Of course, before we get into these 3 phases, there's a very important phase that happened before this, which we are assuming, which is that very important data gathering phase. But once we've gathered our data, what we think is a helpful way to look at it is that you enter a judgment stage, a calculation stage, and then a reporting stage. And we will unpack what we need in each of those stages and why it matters. So once you have your information in the judgment stage, what we mean by that is this is where you have a look at that data that you've gathered and you make your critical assessments as to things like FBE status and those types of things. So that's why we speak about things like business purpose and decision making. So you need the relevant information that tells you at a glance, what is this business all about? What facilities does it have? Does it have the relevant staff, etc., for you to kind of categorize that entity for further processing within your process? This establishes defensibility, as we've said, and then you move on to the calculation stage. The calculation stage is a critical stage. So if you look at your CFC process, it's always a very different process if you've got 3 CFCs compared to if you've got 100 CFCs. So if you've got 3 CFCs, it's very easy to plug data gaps and to email people and ask for missing data points. If you've got 100 CFCs, standardized data collection is critical. You simply cannot chase data gaps for 100 CFCs. It's too time consuming. It's all you'll end up doing. And it takes time away, of course, from that judgment stage if you're spending all of your time chasing data. So standardized data is incredibly important, because standardized data facilitates standardized and consistent calculations. So performing your calculations consistently across your 100 CFCs is, of course, incredibly important in terms of reaching those consistent outcomes and consistently making the same judgments. Lastly, we get to the reporting stage, and this is really the critical point, because all of the hard work that we put in during the judgment and the calculation stage really means nothing if the reporting stage goes wrong, because this is the only stage that reaches the revenue authority. So in the reporting stage, this is where we prepare our IT10B schedule with all of the inputs that we file alongside our tax return, and that essentially summarizes what went into the CFC imputation that we included in the tax return. So critical things there is that this is an audit-ready output, and that we have the necessary backup for the line items that's reflected in there, and that we are able to evidence the full chain of the logic that led to us creating that one fairly slim document that is the output of this lengthy and big process.
Great. Thanks for that, Devon. So now that we've framed the decisions and the stages, let's talk about what good actually looks like, a good process, right? A robust advisor-ready process should give you three things: defensible evidence, decision trails, and audit-ready documentation. Cor, could you please talk us through why these are crucial?
Yeah, we touched on it a little bit earlier, and that is the CFC legislation and the application has become ever more nuanced, because we oversimplify trying to fit a square peg into a round hole in certain instances. So we got to make it work. That heightens the sensitivity around not only having a business narrative. You would sit in South Africa as part of a multinational group, and you would be aware as a business person, as part of the tax function perhaps, or the finance function, you would know what the various entities across the world does and what the particular employees, etc. At least you will have a broad understanding thereof. But that in itself is no longer sufficient. We can't just go, well, obviously the entity would have an FB. We got to recognize that externally, whether you are the statutory auditor or a revenue authority, you need to be able to satisfy yourself of why do you say there's an FB, and it can't just be, well, because they do business. So defending our positions, not only taking them but being able to demonstrate. Equally important is the decision trail, is to say, well, okay, I've gathered sufficient reputable and reliable defense, evidence. How did I go from that evidence to the conclusion that I reached? What comparators did I use? How did it work? And we all those experienced in CFC knows that typically the very difficult questions arise at the back end of the process or under huge time pressure, in which time there is not sufficient capacity or opportunity to go and rehash or to figure out how you got to your different decisions. You need to have that decision process readily on file. And the last point is this audit-ready documentation. In order to be able to, in quick succession, produce the whole evidence trail and the decision-making process, so that your statutory auditor working under huge time pressures can agree and see and understand your position. And secondly, when the revenue authority comes, you typically give you 21 days, that type of thing, in order for your response. That's not enough to go and find it. So you need a process that is easily made available to those type of stakeholders.
Yeah, thanks for that, Cor. I mean, that tees up our next portion perfectly. So this all becomes painfully clear the moment a tax authority asks questions. Devon, could you please talk us through some of the challenges that you've seen in clients that are undergoing audits?
Yes, Chris, so latching onto what Cord just mentioned, if you get an inquiry or an audit from a tax authority and let's say you're given 21 business days to respond to it, what may happen is that the Revenue Authority might not only ask you a question about last year or the year before that, the question might relate to 7 years ago or 8 years ago. That is a big ask for a very data intensive process like a CFC cycle where you've got 100 entities. They might zoom in on 10 entities. That they might ask you a question about your imputation number, which relates to, a large number of entities. So finding that information over a vast period of time can be a major challenge. Also, there's a couple of practical realities. So often, if you run a large process like this, it's by definition multi-jurisdictional. Your CFCs are foreign companies. So the people that you are reliant on for information, for confirmations about the roles of people within organizations, what do they do? Are they operational? Are they managerial, etc.? Those people move and they leave organizations. They are simply not available to answer questions when they come up later. So if you have not in a structured manner captured those confirmations, that can be very tricky to manage and to evidence to a revenue authority. Also, tying into that, the evidence for past judgments. Now, as Cor said, just sort of looking at a business when you live in a process, you can see that a company is actively trading, it's generating profits. It's very obvious that it has a foreign business establishment. It's very easy to apply that exemption in that year. But of course, a lot hangs on it. These are high stakes judgments that we make. So if we don't have the evidence to support that judgment, 5 years from now, it's a cold paper decision. If that backing is not there, it becomes very difficult to substantiate. And lastly, the point that you have there on the slide is perhaps one of the most important ones. No single place where everything is located. This is a very common challenge in a CFC process. You, as we'll see in a couple of slides' time, you don't just need a set of financial statements in order to run a CFC compliance process. You need many, many different documents. You need HR-related information. Often you need contracts, various documents. And typically, these would be housed in various places, in people's inboxes, on people's desktops, some perhaps even in hard copy format. If these are not retained in a single place in an orderly manner, you can imagine that is next to impossible to keep track of.
Thanks, Stephen. So, I mean, I guess the key thing here is that if your evidence isn't structured and centralized, you end up scrambling to piece history together. And that's where the most exposure actually comes from.
Yeah, that's right, Chris. It's not that you don't have the information to evidence your judgments. It's that you don't have it in the relevant format and readily available to do it in a timely manner.
100%. So, sorry, I'm just battling to get, there we go. My next slide started. Thanks for that, Devon. So with that in mind, over the last decade, the biggest shift I've seen is the move from reactive to designed processes. Most of us started with the same tools, spreadsheets circulating across regions, trial balances that didn't quite match the AFS, data living in personal drives, as you just said, Devon, or emails, and a lot of manual rework every year. And many organizations still find themselves stuck there, not because they're doing anything wrong, but because the requirements have outgrown the tools. The shift we're seeing now is the move from a patchwork of manual tasks to a structured data foundation. Data that's captured once, standardized once, and then reused across every compliance requirement. Modern tax teams are designing for repeatability. Automation takes care of extraction and structuring. Multi-language support removes barriers, and a centralized data environment ensures every downstream process works off the same truth. The real benefit is that it frees the team to focus on judgment rather than maintenance. Now, if we take a look at that foundation and we stretch it across the full compliance cycle, this is what it actually looks like. For most multinationals, the starting point is messy. Local GAAP financials, TBs, supporting schedules, sometimes in different languages, all in different formats. Before you can even get to analysis, you're already spending weeks just aligning the basics. The middle piece, the ingestion, mapping, and validation, is the point where everything tends to bottleneck. If your TB doesn't reconcile back to the AFS, or if the categories don't tie to your accounting policies, every judgment downstream becomes fragile. But once the data is clean, validated, and centralized, something interesting happens. CBCR, CFC, Pillar 2, all start drawing from the same core data set. You're no longer rebuilding the structure each time. And that's what unlocks optimization, because when the mechanics are sorted, the team finally has bandwidth to think about the actual tax positions rather than chasing numbers. Most organizations are still spending 80% of their time left of center on this slide. The shift we're pushing toward is to rebalance that, so judgment and strategy take the lead. At Fluid, we've taken everything we've just spoken about, the ingestion, structuring, validation, and the reuse of data across multiple processes, and consolidated it into a single environment we call the tax data lake. The concept is simple, and it repeats what we've spoken about. Collect once, structure once, validate once. Then use that data set everywhere you need it. It means you're no longer repeating the same data collection exercise for CBCR, and then again for CFC, and then again for Pillar 2. Instead, the data becomes a strategic asset that supports all of these requirements simultaneously. This isn't about technology. It's a practical approach to managing increasing tax complexity across multiple jurisdictions. Let's have a look at some of the benefits of transformation that we've seen in the past, Devan. Whenever this kind of structure is put in place, the pattern's remarkably consistent. Teams suddenly recover a huge amount of time they didn't realize they were losing. Reporting becomes far more predictable because the data is settled much earlier. And the issues that normally only appear right at the end, such as misclassifications, gaps, inconsistencies, are surfaced much earlier in the reporting cycle when you can actually do something about them. As I've said before, the real shift, look, there is time saved, right? But that's not the real shift. It's that the team can finally focus on the quality of the judgments rather than the mechanics of gathering the numbers. So let's bring this to life, Devan. I mean, across our combined experience, we've seen organizations cut effort dramatically and strengthen their positions by adopting a structured, repeatable process. And this connects directly to audit situations. Can you talk us through why standard financials are often not enough to support the judgments required under Section 9D?
Sure, Chris. As you mentioned, if we strictly look at what the Act requires, SARS can call upon the financial statements of a CFC. As we well know, if you look at a set of financial statements, what you'll typically find there, you'll have information like foreign exchange gains, interest, royalties, management fees, and staff costs. But there'll be a couple of important nuances to those numbers that you typically won't have. Now, you may have related party disclosure that tells you some of the counterparties to items like interest and royalties and maybe management fees. But for example, you typically won't know the gross positions of foreign exchange gains and losses and who those counterparties are. And of course, we know that is incredibly important for accessing things like inter-CFC exemptions. So outside of the annual financial statements, you need a mechanism for capturing that. And further to that, you need a mechanism for forcing your overseas counterparts to reconcile that number that is in their financial statements to the gross positions that they are reporting to you for the foreign exchange gains and losses. So you need some sort of additional way to gather that information. Also, if we look at something like the foreign business establishment judgment, you may see that there's staff cost in a set of financial statements, and it might look like the business is active. That unfortunately does not tell you what those staff members do, whether they are operational, managerial, and whether this business is necessarily suitably equipped as required. So again, you need information that is more HR related than purely financial to supplement this and to make those relevant judgments. So there are a host of data points that you can't simply get from your financial statements that you need from elsewhere.
Thanks for that, Dew. I think when we bring it back to the audit side of things, I think it just showed most audits exposure doesn't come from having wrong numbers. I mean, you can get to these right numbers, but you also need to have an audit trail of how did you get to those numbers, right? You need to be able to justify your judgments and your decisions and the numbers that you brought in. So having them available at the time of the analysis is one thing, but if you get questioned on them, you need to be able to have that context to be able to justify what you've done. So let's dive into how a purpose-built process can protect tax teams. Devon, can you talk us through the benefits listed here and how a tax team would benefit from these?
Absolutely. It really ties back also to the three-step process that we discussed up front, but really it comes down to structure and consistency. So right up front, having structured evidence, capturing the relevant inputs that you need on an annual basis when you make those judgments, and having it in that central repository and storing it year on year, retaining it year on year, and having that easily accessible in case of a query by a tax authority is essential. Explicit judgments, what we mean by that is not only making your judgments, but documenting them, having some sort of record that for this specific CFC, I have in this year elected for it to have FBE status, and this is my reasoning. If it's very clear, perhaps there's not too much to say, but if it is a contentious point, I have attached my position paper, or I have included a couple of comments on why I believe it was suitably equipped. Consistent calculations, to the earlier point, if I have 100 CFCs in my within my population of CFCs, I need to be sure that I'm applying the 5% FBE de minimis exemption the same way each time that it applies to each CFC. I can't go and apply it differently to these 10 and then differently to the next 10. So I need a guaranteed way to make sure that that happens, whether that is by way of a locked formula or a tool. You cannot have that go wrong. So in some way that needs to be ensured, whilst also being aware that legislative change takes place. So we make the point there that it needs to be consistent year after year. That is true. However, we also need to take account of the fact that it might need to be updated and that there are valid reasons for it to change in some cases. And then audit-ready reporting. You want the IT10B. What can sometimes happen is that it's, of course, an awful lot of work to get through a CFC cycle and processes. There's a lot of judgments that happen. It really is a very time-consuming process. And you get right to the end, it's often quite close to a tax filing period. And you have to, in a hurry, compile an IT10B report, which some aspects of it are fairly simple to complete, but of course there's a lot of quite technical bits of it that need to be ticked, whether certain sections applied, etc. The last thing you want is to have to go back to each CFC and do a detailed check of what happened. So ideally, you also want some way of being able to complete that as you go along, so that it's not a problem at the end, and so that you apply your mind when you do it whilst you are doing your compliance process.
Thanks, Devon. So yeah, so just to the audience, we have a bit of time for some Q&A. So if you've got any questions, please do pop them into the chat. We've had one comment in the chat so far. Thanks, Amo. So Cor, I don't know if you can see it on your side there, but Amo says, nice seeing you and hearing you again. So we can give a quick shout out to Amo there. How's it, Amo? Cor, can you maybe just from a legal perspective, I mean, obviously, so we've spoken a lot about like the audits and advisory and the data collection, which is all quite operational, but there's clear legal benefit to it when you're in a situation where you need to give advice or an organization wants to review their positions or they're having to justify a position they've taken. How having this information available really helps you and makes it easier for you to do your job.
Chris, the quality of an opinion or legal defense is primarily determined by the quality of the underlying facts. And what we find is that where the detail of the facts are not at a sufficient level or not at a sufficient quality, then you can give answers that says, well, in principle, you find, or in principle, this is the outcome. But that doesn't get you over the line when you have to go and actually prove it in a dispute, where there is a dispute. So it's perfectly fine for many of the organizations where the matters are not scrutinized in detail, and you go for many years with positions that are, yeah, it should be fine, it should be in this bucket, but it's never stress tested. And now, Devon explained earlier, we see revenue now these days often going back 3, 4, 5 years in the first instance when doing the audit. You may not have been there, and it's at that point that the weaknesses of poor data or inappropriate data becomes a point of pressure. An actual something that I wish to highlight, we did touch on it earlier, but I think it should be emphasized, and that is, for me, sitting on the legal side, the biggest advantage of moving from chasing data to applying your mind in making better judgment calls is the fact that that allows a group also to move to a principle-led position. You're not in retrospect looking back and saying, it's the end of the year, yeah, I'm trying to find out whatever it may be. What position by points of principle and say, when I'm confronted with this for the following reasons, this is what our group believes to be the position, and we will apply this principle to underlying facts to test whether or not we pass. We won't go the other way and say, this is the outcome we want, let's try and build facts to get to that one. And if you apply the principle-led approach, you'll find that over time, your decision outcomes will be much more robust and defensible compared with just being reactive and trying to defend a position.
Thanks for that, course. I guess there's, from a practical perspective, right, that means that you're enabling yourself to kind of to plan and structure your CFCs and the transaction between these CFCs in the most efficient manner, and that you can identify perhaps certain types of transactions that are happening within your organization that are resulting in large imputable amounts that don't necessarily need to be there. Have you got any? Are there any kind of obvious or like perhaps examples of where efficiency can be found?
Yeah, a principal example could be, the CFC outcomes give you the answers after the fact. So if there is a surprise in CFC imputation, for example, a very significant foreign exchange movement, there was a big transaction. Foreign exchange was left in a selling entity that no longer has business substance. It just sits with a huge amounts of cash for the year. The group had a choice. It could have distributed the cash moved it to different entities that may require it, but for whatever reason, it was left there. The deal team moved along. Now you come to year-end CFC calculations, and all of a sudden, the group is surprised by a very significant foreign exchange imputation, which at that point, in real time.
Sorry, I'm just jumping in there. Your microphone's a little bit, we're losing you a little bit on your mic. I don't know if it's your...
I plugged in into all the wires that I can possibly do, but perhaps if my mic is not clear, monitoring, then anyone can deal with these type of exceptions. Just talk us through that, considering my mic's not working well.
Yeah, perhaps Devon, you can kind of just talk us through there a little bit, to put you on the spot.
Yeah, no, that's fine. Yeah, so I think that broke up quite a bit, but I think the point that Cor was making is that so often the CFC process and the effects of our CFCs is a bit more reflective, and what we see at the end of the process is maybe an imputation, like Cor mentioned, a foreign exchange gain, for example, via an imputation in an entity that no longer does too much, and the group was faced with a couple of alternatives. Perhaps during the the tax year, it could have upstreamed that cash to another entity by way of a dividend, another entity that has more substance and has more activities that could have shielded that foreign exchange gain and had a different outcome. So if you have the data available to you in more of a real-time basis, or at least just as more of a dashboard across your kind of CFC landscape, to be able to see, well, what does this look like, and to see, well, how could you potentially shift things around? That does open the door to doing things more efficiently within your CFC structure for those anomalies.
Yeah, instead of chasing your tail, you start leading the dog. That's the quality of the decisions and the function. If you've got more capacity, you can apply your mind to things that improve the world, as opposed to merely recording the facts.
Yeah, 100%. Thanks, Corp. You coming through loud and clear there again. Thank you.
Yeah, I've gone to my telemarketing set, so.
Well, if law ever doesn't work out, you can always revert back to telemarketing. You've got a good voice for it.
Good
so
stuff.
I think it comes down, like Corey, you just said it, right? I was thinking when we were talking through there, is that there's opportunity for efficiency and getting a lot smarter in what you do with your CFCs, right? And how you structure them and handle the intercompany transactions. The key thing is that what I've seen in the past is that tax teams are so busy and chasing their tails. Like, we've got tax experts across the country who are kind of just like managing data collection and chasing people to give data and trying to clean data. And that's not where their expertise lies, right? We want to be able to free up tax people to apply their minds and actually do tax optimization, not just data gathering. So I think one of the kind of final points on this slide is that when organizations keep their evidence and their decisions neatly tied together, not only are audits usually quite straightforward, but the reporting, the optimization, it opens up opportunities for that. Where things slow down in general, whether it's in an audit or whether it's in your reporting cycles, is when you having to go digging through years of emails and files and corporate memory, if that kind of sometimes exists, to recreate what's happened. So yeah, I mean, one of the questions we often get after these sessions is where do we start? It's one thing to understand the principles of an advisor-ready process. It's another to translate that into your own environment. So if you're interested in a short workshop, we've got a solution accelerator that helps us in a 2-hour workshop to be able to find practical ways to find efficiencies in your processes. So if you're interested in that, please do reach out. But based on that, I just wanted to say thanks to everyone. Sorry, slide control's a bit lacking there, but thanks everyone, and thank you to Cor and Devon.
Pleasure.
It's really been a pleasure hosting this webinar with you guys, and thank you for all the insights you've given. There's a wealth of knowledge. We look forward to episode 3, where we're going to be moving from principles to actual practice with some live scenario clinic covering real world structures and judgment paths. So we look forward to see you then. And until then, to everyone in the audience, have a Merry Christmas and a good break over December. And we look forward to catching up in January. Cheers,
Thank
everyone.
you all.